The market keeping its floor at about 56.80 odd for the last hour or so. So we have picked up from the lows of this session. And remember, on expiry day, you would expect some bit of volatility. So that's pretty much been the order of the day. The gainers then, some auto names, M&M, Maruti, these are stocks which have held out. Tata Motors has done well for itself. Hero MotoCorp also up about 1%. Bajaj Auto. So among the rate sensitives, it's really the auto pack which is holding ground. Cement continues to do decent. ACC is holding up in the session. Tata Motors also is performing in trade. On the losing side, today we are looking at BHUL, which is down about 1.5%. Some of the commodity names that are looking a bit weak, and IT, Infosys and Wipro are stepping down a bit.
Right, a quick check on the currency market as well. You are seeing some strength come back into the rupee. 53.24 is where you're seeing the rupee at. It's slipped a little as we speak. 53.30 is where it's trading at. So it's gained about something like 21 paise from yesterday's closing level of roughly 53.50. Also because you've seen most oil marketing companies complete their dollar buying in the market to meet month-end oil imports. Also some amount of exporter selling seen in the market, so that's adding strength to the rupee. Don't forget the strength that's come back into equities after we saw weakness across the board in Asia yesterday. So all of these factors helping the rupee hold up. Fairly quiet in the fixed income markets. The yield on the fixed income the 10-year benchmark bond has climbed from levels of 8.16 to 8.18, but you've seen it boxed into a band of within a band of 8.15 to 8.2 for some days now. You will see some marginal inching up. Remember, the liquidity situation has gotten a little more tight in recent days after the advanced tax outflows. You have the liquidity deficit, the daily deficit that is running at about 80,000 crores. So some amount of pressure in the market, but that's expected to go away once you see month-end payments coming from the center. So not a long-term worry really for the markets, but for now, some amount of tightness in yields on the 10-year bond.